In this video, I'm going to be ranking the 5 best New South Wales areas I feel are ripe for capital growth. Now, this isn't a recommendation to go out and buy in these areas. I just think that these 5 areas have the highest potential for capital growth. So please take this with a grain of salt. Do not consider it personal financial advice. It's all very general in nature, sprinkled with factual information, and be that as it may, it's really part of this is just around a lot of the analysis that I've done, and it comes with a massive disclaimer to say, go consider your overall financial situation with a financial service professional, accountant, financial planner, mortgage broker, property conveyancer around how purchasing property in any of these areas or largely Australia-wide can benefit you. But look, at a high level, I'm going to be going through information for Dubbo, Orange, Tamworth and Wagga Wagga. And I'm going to be ranking them 1 to 5 in terms of where I feel the most potential for capital growth sits based on analysis and research that I've done, and we'll go through some of that data in this video. So when I talk about these areas, I'm really talking about the supply of property listings in the area, the demand for property. We'll also go through things like vacancy rates, population growth. We'll go through employment or unemployment. We'll go through the creation of local jobs and the either increase or decrease of unemployment in the area. We'll go through what infrastructure is being created in the pipeline to create jobs. We'll also go through how affordable these areas are and what sort of future housing supply is coming to these areas as well. So let's start off with the 5th ranked area. We'll start off with Tamworth, coming in at number 5 in my opinion. Look, even though it's rated last, I actually like Tamworth. I wouldn't lose sleep buying here. It's probably one of the better locations to buy in New South Wales. So there's a lot of positives about Tamworth. At the moment, they have ultra low unemployment of only around 2.6%. So given that the national Australian average is 4.1%, this is relatively good. In addition, the amount of local jobs has been increasing in the area. So if you have an increase in local jobs and decreasing unemployment, that means that the existing population base is getting more productive and it's attracting talent from elsewhere to come and work in Tamworth as well. Days on market have fallen from 54 all the way down to 40. Although it's not less than the 30-day benchmark, it is moving in the right direction and we could see it in the near future move to below 30 days. Vacancy rate remains relatively healthy at less than 2%. It's sitting at 1.8% currently, and population forecast is 18% growth to the year 2041. So at a high level, anything greater than about 1 to 1.5% per annum on average is good population growth. Given that there's a number of projections in Australia using a low, medium and high series model, anything between the low and medium, which is 1 to 1.5% year-on-year growth, is relatively good. And to cap off the positives, it is a bit of a regional hub for that area as well. So it's predominantly seen as a regional service centres that services that area of regional New South Wales. Things that you need to be careful of in Tamworth is that the number of listings have risen ever so slightly over the recent period. So be that as it may, there might be a small increase in supply. Out of the 5 property locations, this area, Tamworth, has the highest vacancy rate. So understand that in terms of rental supply. Population growth isn't forecasted to dramatically accelerate. It's just good at this stage. And as we understand that the number of development approvals have been increasing in the area. So although demand is high for property in Tamworth, there is a steady increase in terms of the overall supply of listings on the market and development applications in future as well. So overall, Tamworth is a good market. It's a decent market, but there's not that massive imbalance in terms of supply and demand that we see in other locations that are ideal for massive amounts for capital growth. You're more than likely to see good, solid, regular returns over the coming years. Next area we're going to look at is Albury. I'm going to place Albury as the number 2 ranked area in this video. And for these reasons, these are some of the positives that it has going for it. It's lucky that it's situated on the border, and that's because it has the benefit of being supported by 2 state governments. So most notably, Albury-Wodonga has seen a lot of investment from the Victoria and New South Wales state governments, as well as the federal government to develop the hospital system in that area, and there's also a lot of federal government infrastructure in that area as well. Since the year 2018, the population has grown roughly 10% from 54,000 to 60,000. So overall, your net internal migration is in the positive direction. The number of days on market is getting toward that 30-day benchmark. At the moment, it's sitting at 37 days. Vacancy rate is only around about 1.5%, so it's still less than 2%, and it's at around about the national Australian average of that 1.5, 1.6% at the moment. moment. Over the last 12 months, it has had decent capital growth, 10% capital growth over the last 12 months, roughly. So in terms of major projects, overall, in terms of the major infrastructure that we're seeing in Albury, we see around 560 million worth of hospital development. That's what I was referring to before. The New South Wales, Victorian and federal state governments have all chipped in funds to develop that. The inland rail project will go through that Albury-Wodonga area, and there's a number of other significant employment drivers in the area that are driving population growth. Why this doesn't sit at number one is unemployment is a little bit higher than the National Australian average. At the moment, National Australian average is around about 4.1, 4.2%. In Albury, we're sitting at 4.8%, which is higher than every other market that we're going to be talking about today in terms of unemployment. And then in terms of affordability, it's not as attractive as other areas that we're going to be referring to today. Next one that we're going to be discussing is Orange. Now, I've ranked Orange fourth in the list. Why I like Orange, and Orange has been relatively popular lately. We hear about it in some property and real estate circles. Orange is one of the strongest regional markets in New South Wales that is performing at the moment. It is a large employer for that area of New South Wales. It has a strong healthcare sector that services that area, and it has somewhat of a mining influence in that area as well. So the economy has been growing as a subset of the mining influence. Buyer demand is up about 16%. Days on market is falling. The number of listings is falling. Vacancy rate is relatively low, lower than the National Australian average. It's sitting at about 1.1%. And the population is forecasted to grow around about 11% in the future. The things that are holding Orange back is it's actually the most expensive market to get into out of all the markets that we're reviewing today. It has a median house price of $740,000, which is more expensive than the other markets. Unemployment has been on the rise and it's risen from extremely low levels. So it looks like it's bouncing back. And as a result, its affordability has become stretched of the higher price point and the recent growth that it's seen. Overall, still a good market, not at the top of the list, but not the worst place to invest. Just be cautious that Orange has already grown considerably and future price growth may already be factored in. Coming in at number 3 on the list is Wagga Wagga. Wagga Wagga is a great little regional town. I like it because it has a diversified economy, which is made up of defense, healthcare, education, logistics, and agriculture that services the area. Overall, in terms of supply and demand, listings are down 20%. Days on market are down nearly 30%. Vacancy rate is down to around 1.1%. And population forecast is relatively decent at around 12%. Wagga Wagga bodes well because it's a little bit more affordable than Orange. It has a growing economy, has a great rental market. It also has strong owner-occupied demand, which fuels capital growth for the future. And overall, it is a relatively balanced market with strong capital growth prospects for the future. The one thing I'd be cautious about purchasing in Wagga is that there's a number of areas where there are a few housing estates that are coming to the market. So there might be large influxes of supply in certain areas of Wagga Wagga. So just be cautious around where you purchase. So that leaves the number 1 placed area. And in case you haven't already surmised, Dubbo comes in at number 1. Long story short, Dubbo comes in at number 1 because it has the tightest supply and demand ratio of all the areas. Listings are down 20%. Vacancy rate comes in at around about 1%. Days on market is down from 46 to 37. And demand from a buyer and rental perspective is up 17% and 9% respectively as well. In terms of future growth, Dubbo's population is forecasted to grow from 58,000 to 78,000, which is approximately 34% growth. So that's nearly double the majority of other areas. And it's the strongest of the 5 areas that we're reviewing today. There's a ton of infrastructure that's occurring in the Dubbo area. There's renewable energy projects. There's the battery energy storage system. There's a number of mixed-use developments, and there's continued government investment into the area. Dubbo is still relatively affordable. The median house price is about $630,000. It's more affordable than Orange, and it's similar to Tamworth as well. So overall, Dubbo is great because it has strong demand, tightening supply. It's an affordable area. There's significant population growth forecast for that area. And overall, it has all the factors for great capital growth potential in the future. So again, look, just to cap this off, this isn't where I tell everybody to invest. It's really where I feel Out of those areas, I feel these are the best 5 in regional New South Wales for their potential for capital growth over the long-term future. You still need to consider your personal financial situation, your price point, your strategy, and your cash flow more notably before you look at investing in any of these areas. And just to recap, going from number 5 all the way down to number 1, we've got at number 5 Tamworth, Orange, Albury, Wagga Wagga, and then number 1 being Dubbo. So look, I'm keen to understand where you feel the best area to invest is. Do you think I've ranked any of these areas too highly or too lowly? Are there other areas that you think should make the cut? If you are looking at investing in property, please do not hesitate to reach out. I'd love to have a chat around what areas might suit your personal financial goals and situation. Otherwise, if you've enjoyed this video, do me a solid and hit like and subscribe, and I'll see you in the next video. Thanks again for watching.